Welcome to Framework Fortune and welcome back Framework Fortune community. I'm your host Ben and it is time for your Monday through Friday weekly episode of The Last Rip, where we take a look at top gainers on the day, recap any trades I took, and see if there's any day trades possibly for the next day. Time is our most valuable asset, so let's not waste any more of it and dive right in. The SPY pulling back again, this time all the way down to 430. We have cracked below that 10-day EMA, so more than likely we are going to come down to the 50-day. But I have a theory on this. The Federal Reserve has been talking about tapering, inflation has gotten high, and I've been saying everything the Fed says doesn't make sense because they can't just come out and tell you that things are wrong. It will cause a panic and make the stock market drop. We know they've been pumping billions of dollars into the market. Now that they're talking about tapering, what is tapering? It's just a fancy word for them slowing down what they were doing. So slowing down buying stocks. And I think they've already started tapering. I think they've been tapering since this drop right here. Maybe even this one. Because they got to put those billions in there in small amounts. They have to invest it in small amounts. Which explains why we constantly have this push up in the market after the COVID drop. This kind of straight up move. Because I think they've already started tapering, I think they've been pulling the money back out of the market slowly without letting anybody know. Because they don't want to crash the market. That's the last thing that they want. So if they have been tapering, next week, Monday, we may see them turn the gas pedal up and it may rebound. Now, I'm bearish on the overall stock market. But all day yesterday, I was just thinking about what the Feds are doing. What could they be doing to try to keep this market up at this point? And I think that's it. They're trying to slowly replace the money they're putting in with investors' money. That's what they want. They want investors' money back into the stock market to keep it going up. So to do that, they've got to give everybody a false sense of confidence, which we have seen throughout all of their hearings and on the media. Everybody's saying the economy is booming, but yet we have problems with unemployment and problems with inflation and all types of shortage problems. Like, we've got problems all across the board. People may be going out and about and spending money again because they're not locked in their houses anymore, but that doesn't fix all of the economy problems. Consumption is only part of an economy. I could be very wrong with this theory. This could be the point to where we start to have that big correction. But I just don't think it is yet. I think they're going to try to pump it up again. Because the stock market right now, if you think of it like a basketball that's got a hole in it, they're trying to pump that basketball up so it will bounce. They can't just pump it up once and then go away from it. If you pump it up once, the air is going to leak right back out. So they've got to continually go back and pump air into that basketball if they want it to be solid and be able to bounce. And then when the market starts to drop, they inflate the ball back up. And we're playing with that inflated ball that has a hole in it right now. So even though they're keeping it inflated, it could pop at any time. Because once you got a hole in something that has a lot of pressure built into it, it could easily pop and all the air come out of it and the basketball deflates. The stock market would deflate, and that would cause a big crash. So if this is the one time that I'm saying I think the market's going to rebound and the market ends up crashing, then so be it. But I think we're going to see another attempt Monday to prop the market up once again. So I held all my shares of GLG. Now I'm in at 120, so I'm down about $100 right now because it closed right under $1. The reason why I stayed in it is because it closed right at $1. This stock has not been over $1 since back here in May. And this is the first time that it's been under $1 the whole entire year. With it breaking back above $1 and actually holding there at that area, $1 is a very strong mental, psychological support and resistance line. Because it held as support, I think we're going to see more volume come into this, especially with them inflating the basketball back up. And we're going to see a pop on Monday, probably across the market, another hot Monday like we had this Monday. And we'll see some moves up. Now, I also looked into GLG, and GLG is a Chinese holding company. And because the Chinese economy is holding up a little bit better than America's economy, because they're not as in much debt, and they're competing, trying to get their yuan as the reserve currency. If the U.S. stock market crashes and the U.S. dollar crashes, well, that sets China up with the global reserve currency, and that could cause China's stock market to explode. Now, that's not going to happen overnight or anything. That's going to be probably a few years process, maybe even a decade. But there's a lot of investors that have been moving money into Asian companies. We've seen multiple Asian ADRs and other Asian companies go on nice rips lately. So this was the first time this has actually been ripping in a very long time. And the PR that they had was acquisition news. They are acquiring two different companies. One is for whatever this is. I'm not even going to attempt to try to say that because I'll massacre it, but it's a special purpose vehicle company. And the other one is a new material company. So I don't know much about those companies, but what I do know is those are two interesting acquisitions all at once from one Asian company that just got buying volume. Now, if it does turn around and it doesn't do anything that I'm talking about, the low was 77. More than likely, it wouldn't drop back down that low in one day, but it could. More than likely, though, there's some support at this 90 to 95 cent area that held up back here before it had this recent sell-off and making that low at the year. With these new acquisitions, we could see this bounce up even higher. It does have the 200-day in the way at that 150-160 area. Break of 160, though, we could easily hit 2, and then after 2, it could continue to run. Now, some other stocks to keep on watch for Monday. SXTC, this was popping Friday, and actually was one that I took a trade on. I took a loss on this, not locking in profits. Several of the trades I took were trades where I could have made some money and just didn't lock anything in, just bad trading on Friday again. So I'm not going to go into all of the trades. The lesson is still just lock in profits when you got them, and I'm going to be focused on that, hyper-focused this week. But this is definitely one to keep on watch as it closed above the 200-day moving average. And back in February, it hit a high of 512, so it could keep climbing. RCAT is another one. Started climbing last week around Tuesday. Did have a little pullback on Friday and after hours, but holding the 200-day here on the 15-minute chart. And on the daily chart, it is above all EMAs quite a bit. It had this downtrend, broke out of that downtrend, so it's super bullish. Could be a pullback on Monday before it starts to run next week, but it could just continue to run as well. It could try to push up to 10 if it breaks over the previous high in January of 775. SGOC closed above all EMAs again. Been very volatile, but so far since the original rip, it's been holding most of its gains and actually is slightly climbing up, trying to test 15. It just needs to have a day where it closes above 15, because the only day where we closed above 15 was this candle here, which at one point in the day we were all the way up at 30. But this thing is so volatile, it could continue to pop with volume continuing in it. XELA, same thing. Looking at it on the daily chart, we've had the big rip. Now we've pulled back. Could see it bounce Monday off of this 320 area or even the $3 area. ARL has had unusual buy-in volume Thursday, as you can see here on the daily chart, getting way more buy-in volume than it normally gets. And it did have a big spike up. So with it closing on Friday above all the EMAs, we could see this continue to be bullish. YVR, same exact pattern as most of these. Had to rip up last week and closing above all EMAs by the end of the week. Had more volume on Thursday than it did Friday, but has held above the 200. And actually, if you look on the 15-minute, it's almost above that 40 DMA and the 10 adaptive EMA. If it can hold around $2, $2.15, we could easily see a bounce on it. AACG as well. This one had a big pop on Thursday. sold most of its gains off, but it was able to close Friday right above the EMAs. So we could easily see a bounce off of that. All of these, I think, have potential for Monday if the Feds do try to reinflate that basketball. Well, that's it for this episode of The Last Rip. Let me know your thoughts on what you think the market is going to do Monday, and throw in any ticker symbols that you're watching for Monday as well. Appreciate everybody joining me as always. Stay safe out there. Until next time.